As we entered the middle of a year that saw gold hit above 5,500, only to retrace by greater than 25% to roughly where it ended in 2025, and which, by the way, is still more than double its price of just a couple of years prior, one has to wonder, is it time for a sanity check on this precious metal? In fact, for those who see the longer-term structural direction of gold rather than its daily price action, I think such a sanity check is really not necessary. And this is because we are not speaking to traders looking to go long or short for a $200 price move. We're speaking to those who understand, or who are at least making the effort to understand, math, and history, and gold's repeatedly confirmed role as a superior collateral to paper money. And I think with this knowledge, we can, as Kipling advised, keep our heads while all those around us are losing theirs. Now, sanity in a time of madness, be it of wars or tech IPOs, is not often easy, as SpaceX, now trading 100 times revenues, makes Elon Musk wealthier than half the population of Canada. It's hard not to think of what Charlie Mackay described as the madness of crowds, is yet another tech mania understandably draws the attention, headlines, and of course dollars away from sober thoughts of future wealth preservation through gold, and instead leads many to the more seductive get-rich calls from an AI bubble led by otherwise openly unprofitable, overvalued, and VC-funded names like Anthropic or OpenAI. Now, the siren call from this tech sector will create many winners and likely many more losers. As such,
Let's pause right here because Piepenburg is pointing out a massive psychological trap in the markets today. Mainstream headlines are completely dominated by this massive tech and AI mania, driving millions of retail investors into overvalued and unprofitable stocks just because of the hype. But history teaches us that these speculative crowds always move from massive greed to complete panic, while tech bubbles create a seductive illusion of instant wealth. They completely blind people from the core objective of long-term assets protection, which can only be achieved through stable, unprintable assets like gold.
game-changing technology memes often make their inevitable moves from overbought to oversold. Not just often, always. In short, the temptations of rising stock prices are currently far more seductive than precious metal headlines. But headlines and manias are often so maniacal precisely because they ignore the basic math and common sense of sound valuation, including the very value of the dollars by which so many maniacs are measuring their stock returns. What most don't seem to realize is that they are literally running uphill in roller skates with a smile on their face and frankly very little understanding between their ears. And of course, many will claim that us gold bugs are jealous of rising markets and apologizing for gold corrections in some kind of effort to forever sell our book. After all, since the 2021 Q4 peak in the S&P 500 to today, stocks are up an impressive 60% in US dollar terms. But what these satisfied top chasers are refusing to see or examine is that when measured in gold for the same 5-year period, the S&P is in fact down 40%. In other words, the vast majority of investors continue to miss the forest for the trees by ignoring the simple fact that they are measuring their so-called wealth and capital gains in a paper currency that is melting in purchasing power right before their eyes wide shut. Now, long-term gold investors see money differently, and hence they see wealth creation and wealth preservation differently.
This is a shocking reality check for anyone celebrating their stock market gains right now. Investors look at their portfolio in US dollar terms and think they are making a massive 60% profit, but they are completely missing the forest for the trees. When you measure the exact same S&P 500% against physical gold over the last 5 years, the stock market is actually down 40%. The illusion of wealth is only happening because people are measuring their success in a paper currency that is actively melting away in purchasing power right before their eyes.
Turn of this century, gold has increased 1,580%, while the major paper currencies of the world have fallen by 95%. Now, this is not fable, but fact. Now, price action gets the headlines, but the real issue is structural and systemic. When looking at gold versus the dollar, there is a consistent, but I feel mistaken focus on money rather than collateral. The world moves on trusted collateral for lending and borrowing. And for 50 years, the collateral or the trust behind the US dollar was the 10-year US Treasury. That is Uncle Sam's sacred IU, backed by the full faith and credit of the US government. Now, we all know that this trust has been incrementally declining since 2014, when a QE-addicted Uncle Sam began diluting his dollar and overissuing his IOUs. And by 2014, the central banks of the world had become net sellers of U.S. treasuries and net buyers of physical gold. Now, this subtle but incremental signal of distrust became exponential by 2022, when the U.S. weaponized an over-indebted dollar, signaling an equally exponential net dumping of U.S. treasuries and a 5x increase in the net stacking of physical gold by the world's central banks. Now, despite recent forced sell-offs in gold by nations like Turkey, who literally had to sell U.S. treasuries and physical gold just to buy enough oil to keep the lights on during a closed Strait of Hormuz, China continues its 19th month of consecutive net gold stacking alongside other net buyers from central banks in Poland to Kazakhstan to Brazil. Meanwhile, the same distrusting world continues to dump Uncle Sam's U.S. treasuries at incredibly alarming rates. Now, China, which once held over 1.3 trillion in U.S. treasuries, now literally holds half that number. And Japan, which is the largest foreign holder of Uncle Sam's debt, just sold more U.S. treasuries in the last quarter than it has sold in the last 4 years. Now, this tells us many things about bonds and yields, which I'll avoid for now. But most importantly, it tells us the world trusts gold as collateral far more than it trusts U.S. IOUs from a nation that is 40 trillion in debt. Now, that's a debt which the U.S. will never repay without dramatically debasing the value of its dollar even further in the years ahead. So, in short, we have to watch what the central banks are doing and not what they are saying.
Watch what central banks do, not what they say. Since Uncle Sam started aggressively printing money and weaponized the global dollar network, international trust has completely evaporated. Foreign central banks have officially flipped from being buyers of US debt to net dumpers of US treasuries. Instead, they are increasing their physical gold accumulation by 5 times. Countries like China and Japan are heavily shedding US obligations because they know a nation with $40 trillion with unpayable debt has no choice but to continuously debase its own currency to survive.
And most importantly, the central banks are building their ark of gold before the rain of dying paper currencies because they understand that the paper money valuations are melting like ice cubes beneath the heat of over 350 trillion in global debt. They are stacking gold at historically unprecedented levels because they see the slow but steady decline of trust in the US dollar and the collateral behind it, that US Treasury. Despite the open evidence of a longer-term structural shift in the global monetary system, from the BRICS de-dollarization, the BIS giving gold a tier 1 asset status, or even the simple fact that central banks now quantifiably hold more physical gold in US treasuries, the more that gold rises against the dollar, the better that gold and collateral reveals itself. And that is why gold investors throughout history have always survived every monetary crisis after the next for literally thousands of years. For them, paper money was just a medium of exchange, but the real money, the real unit of account, in short, the real collateral, was always honest gold rather than the dishonest IOUs and equally dishonest paper currencies. The US debt disaster is not only an American problem, it's a global problem. Nations can't thrive when their deficit spending and debt levels increase exponentially higher than the revenues from GDP growth or tax receipts. And looking around the world, from Canada to the UK or France to Japan, there's greater than 100% debt to GDP levels in each of these nations that are hiding in plain sight. And they're also embarrassing and they're completely unsustainable. So the only way forward is either a direct default or an indirect default on their debt. This means that America and its dollar will quietly engage in the tricks of an indirect default. And this indirect default involves nothing more than steadily debasing the dollar to inflate away Uncle Sam's bar tab while simultaneously lying about the actual inflation which they alone created and frankly that they need. Now, this debasement tactic, which dates as far back as ancient Rome to as recent as Yugoslavia in the 1990s, is the very same tactic being used by the DC crowd, whatever you think, left or right. This means the very dollar by which most measure their wealth is debasing at a compounding rate of at least 8% per year. Now, Uncle Sam, of course, can play this game of incremental to eventually exponential dollar debasement because he has an infinite supply of US treasuries he can issue, and theoretically an infinite supply of US dollars he can mouse click out of thin air to support and purchase those US treasuries and keep yields suppressed and continue the debt game. Now, needless to say, gold, which has a finite global supply of roughly 8 billion ounces and an annual mining production of roughly 116 million ounces, cannot, by its very nature, be mouse-clicked out of thin air and hence debased at will. Again, the central banks of the world see this endgame. They are not trying to time the slow drip death of trust and purchasing power of a world reserve currency or any paper currency. They're simply preparing for it. So as
This explains the dark endgame of global suffrage debt. Western countries with debt to GDP levels well over 100% cannot afford an honest default, so they choose an indirect default. This simply means they print endless credit to artificially inflate evade their liabilities while actively hiding the real inflation numbers they created. Your paper wealth is currently rising at a compounding rate of at least 8% every single year. Central banks understand this blueprint, which is why they are building a massive gold arc before the inevitable reign of dying paper currency completely flattens the financial system.
the headlines buzz and as debates rage over the duration of war and peace, of the new Fed sheriff's intent to raise or lower rates, or whether AI is a bubble or just some dystopian nightmare, whether deflation will precede inflation, or whether gold has peaked or not peaked, or whether there'll be a gold revaluation, or maybe a reset or no reset, it is so critical to step away from the noise and the sirens of tech and the tweets of front runners to fearmongers and just keep a steady eye on the slow and steady repricing of the very paper money by which you measure your wealth. Is your wealth collateralized by the dishonest paper promises and history of your government or by the honest profile and history of physical gold? And once you understand this, price action fog and manias in risk assets lose priority to the oldest secret of sophisticated wealth preservation among legacy families for generations. And that secret is simply gold. This precious metal is more honest and time confirmed as real money and hence real wealth than any paper currency throughout history, including that once sacred but US paper dollar. So no, this time is not different. The dollar will be debased slowly, then steadily, incrementally, then exponentially. And when the up-o moment comes, you're going to wish you had something that could preserve your wealth against that moment. And again, that answer is very simple. It's a precious metal called gold.